Shashi's coming. Hi, Shashi.
Hey everyone, thanks for having me here.
Hi, is this Shashi?
Yeah,
Nice meeting you.
same here. Thanks for inviting me. Really happy to be here.
Thank you. We're waiting for other coming.
Hi guys.
Who's talking? Umar? Hello.
Yes, people, I am.
I thought you were a boy. Sorry. Maybe we'll wait for 3 more minutes for other guests coming. we will wait for 1 more minute. We will start at 8:05. Think rate cuts were a sure thing this year. Now, most people do not expect cuts at all, and some are even pricing in potential rate hikes. On top of that, the S&P 500 Shiller PE is near its highest level in 155 years. 10-year Treasury yields just keep climbing. Cash is flowing out of markets, and investors are scrambling to find a new safe place to park their capital. Here's something most people overlook. Let's say CPI drops before traditional markets open, or a geopolitical crisis breaks out during Asian trading hours. All regular markets are either closed or under maintenance. So, where do traders go to react instantly? That is the main talk we are breaking down today. Quick reminder, feel free to join our official Soundx community and our Builder and KOL WeChat group. We run daily events and drop rewards every single day. We've got 10 awesome lineup today. I think some of the guests not here, but we still got some guests here. Hello Ben. We've got Ben, Shashi, and Umar here. Maybe we can have a quick introduction about our guests. Ben, do you want to go first? Hello?
Yeah, okay.
Yes, go ahead. I can hear you.
Okay, is it all right? My name is Ben, and yeah, we have been here so many times, and I'm glad to be here again, once again, to discuss on this very important topic that we're or diving deep into. I would love to give my own thoughts on what I think about the questions, and also to learn from my co-speakers on what they have to say. Thank you for having me, PP.
Thank you, Ben. You're our old friend and you have come to our space for a lot of times. Thank you having you here again. And we've got a new friend here, Shashi. Hello, Shashi. Do you want to introduce yourself?
Hey everyone, this is Shashi Shekhar. Um, we together with a couple of friends run a fund called Not Alone Ventures. We are a venture and a liquid fund. And the main thing that we actually do is we just don't deploy capital, but we also deploy our distribution network and our tech expertise for projects to actually build faster. So we call ourselves a multi-capital fund, which essentially means we deploy beyond money. So yeah, happy to be here. In past, I was head of ecosystem for ICP, and before that for New Foundation. So I've been in this space for more than 6 years now, and really excited about what every cycle has for us to build. and what really good tech people are building right now.
Thank you, Shashi. Thanks for having you here. And I've heard that you got a lot of experience in the economy and crypto field. I'm very excited to hear what you say today. And we've also got one Soundmax builder. All, all right, it's okay. I think they've got some internet problem. Never mind. Today we're covering everything like monetary policy, asset allocation, institutional insights, and on-chain infrastructure. We've got macro trading and builder perspectives all in one place. This gonna be a very great session. Let's move to the first question. We all know that the basics S&P 500 values are at 155-year high. Treasury yields keep shooting up. Uh, Hi Dong, can you hear us now? Do you want to try to speak? I think he still got some internet problem, but never mind. We can continue our question with rates staying high and the Fed turning hawkish. Which area cracked first? Overpriced tech stocks, rate sensitive real estate, or emerging markets getting hammered by the strong US dollar? Shashi, can you share what you are seeing out of there?
See, ideally, for how you see the market right now, the X factor here is the war. Even the US didn't expect the war to turn out like this. And this was a miscalculation on the side. Right now, the overall global economy is slowing down. And and so every calculation that normally happens, when I say this, for example, every time there is a QE, quantitative easing, that starts, Bitcoin goes in 6 months almost 100%, and and in 12 months it goes somewhere around 600 to 1200%, and this has been consistent throughout. QE started officially on December 1st or 4th last year. So ideally, we are actually still in the QE cycle, right? But because of the war, nobody planned for it and it came out of the blue. Every calculation in the book, every macroeconomic factor has been this thing out of have been thrown out of the window. And right now, the global economy is slowing, which essentially means everything, right? It's a huge contraction that is happening in the economy. We are still not seeing the repercussions of it at a macro level, but at a in minor pockets, we still see that, and that's why you see all these factors where Fed is not cutting the rates further, and all of this. But this won't hold long, and I will tell you why. Because uh, there are three major IPOs in US coming up: SpaceX, OpenAI, and Anthropic. And for that to happen properly, roughly $3 trillion needs to be added to the in liquidity overall, right? So this is just a matter of time when this war gets over and things start, and there are major rate cuts that will start happening. Of course, it was supposed to happen by now. We are already in May, but I think it's just matter of maximum 60 days when you see this thing flowing in, because they cannot continue. This is election year in US, midterm elections, plus these three IPOs. Overall, they cannot continue. So you see those rate cuts are on the horizon, big ones.
Oh, thank you, Sashi. That is really solid points that you bring to us. I see. Dawn is joining our speaker side. Dawn, do you want to share your thoughts on this question? Dawn, can you speak now?
Hi, good morning. Can you hear me?
Oh yeah, we can hear you. It's nice having you here. Maybe you can have a quick introduction about yourself and answer this question. I'm not sure if you have heard that question. Hi, Dawn. Oh my god, I think at downside there is also some network problem. Never mind. Maybe we can move to the second question first. Mm, so for the second question, hey, hello, Dong. For the second question, like, April CPI hit 3.8%, higher than expected, and core CPI rebounds to 2.8%, the market now betting the Fed could actually raise rates down the line. So, this question I want to ask Ben, is this just noisy data, or is the Fed officially shifting gears, pushing cuts and leading fully hawkish? What do you think? Hi, Ben.
Okay. Can you guys hear me?
Yes, we can hear you.
Okay, that's good. I'm actually glancing through the question because I didn't get it clearly. But my opinion on it is, I think currently, I don't think there's any big thing that is about to happen, or if there's any big change that's about to happen, because for the fact that last week we saw what was happening on the top stage of the global market, where there's a very good, I think, the visit of the United States president to the Chinese to China, and in all aspects, we are expecting to see great positivity in the inflow in the market before there's going to be any significant shift. Because let's say if there's no inflow of liquidity, definitely I don't think the Fed will be cutting on anytime soon. And if the Fed is not cutting, there's no way we'll be having a very good market for the meantime. So I think everything is just a pause for now.
That's all, Ben.
Yeah, that's all. That's all.
And thanks for your sharing. It's an amazing point. I think the current market environment is pretty risky. High interest rates are not going anywhere. Like, geopolitical tensions are ongoing and tariffs are still uncertain. Global investors are actively hunting for shelters to hedge risks. Gold, Bitcoin, shorter bonds, or plain cash. Mm, I want to ask Umar, which asset do you think will attract the most capital moving forward? Hi, Umar. Do you want to answer this question?
Hi, are you listening to me? Are you Hi? Because of high interest rates and global problems, people are putting money into safer places like gold, cash, and short-term bonds. Some investors are choosing Bitcoin as another way to protect their money. When markets feel risky, people put money in safer places like gold. Bitcoin and cash.
Thank you, Umar. Even though the answer is very short, but you got the points. I see Alexander is online. Hello, Alexander. Can you hear us, Alexander?
Hi, GMG.
GM. But I found
Yeah, I'm good.
your internet is
I was happy to call.
quite awful.
You got what I say, ba?
Yeah, we can hear you. Maybe you can have an introduction about yourself first.
Okay, my name is Alexander SQ. I'm one of the HTX ambassador or co. So I'm also Tron EcoStar ambassador. I'm into Web3. I'm a content creator and trader as well. So that's all about me.
Thank you for joining our space tonight. Even though a little bit late, but it's okay. Hi, Alexander. Can you just close? Okay. Um, we can continue our discussion about the question three. I mean, next I want to ask Ben. How do you think about this? Like, which asset do you think we will attract the most capital moving forward? Hi, Ben. Hello,
What's
Ben.
the question? What is? Yeah, can you hear me?
Yes, we can hear you.
I said, can you please repeat the question?
Yes, the question is like, which asset do you think will attract the most capital moving forward?
I well, it depends. It depends. I think just like Omar said, the one that the people have trusted for the meantime, I think that's where they will be banking in because I do see people talk about the reward assets and other aspects, but at everyone who is in crypto will always want to rush down to the mentor project that they think that is safer. Like people have investment in Tron, people running to Bitcoin, and people going for SRP. So that's I believe the big talk will always come to. I believe crypto is more safer because even though we found out that Bitcoin the fluctuation in price, but at the end of the day, we have come to a certain point that people trust and believe that it's a very good asset for someone to hold and believe in. So I believe people will come into crypto and they feel more safer in crypto than other aspects. So all those other aspects like gold, silver, um, real estate, they're also good place, but I think crypto will always dominate. And yeah, Bitcoin and the top big guys will always be the favorite place to invest in.
Very interesting. I think you're very like you're a Bitcoin crypto believer. That's great. Next one I want to ask Shashi. Do you have any different thought, or different opinion on this?
Yeah. So ideally, in this market, right, until this war is going on, you will see short-term liquidity flows, like a spur in liquidity flows and a contraction depending upon which way the war is swinging. But overall, because we cannot take a longer, so I would give you a short-term horizon and a longer-term horizon. When I say short-term, is like next 2 months. Long-term, I say the rest of the year. For now, so very short-term, I think you will see a lot of money moving in stocks because S&P is giving good returns right now. So you will see that gold is not going to move. Gold run has already happened. I'm sorry to say this, but gold won't be having there. We will not see people going into gold for now, for the short term. Even though we have this war and all going on, gold is not going anywhere. Gold had already had it run due to tariffs and US dollar hedging. That ship has sailed. What we will see eventually is uh, two types of assets in short term, uh, in stocks and US bonds. Right now, US bonds are giving good returns, but as we go, as the war settles down, the dust settles down, and the liquidity easing starts, um, it will be stocks followed by crypto. But there is an outlier here in the short term. If the war escalates, then Bitcoin and Ethereum and stable coins will see a lot of flow of money. Stable coin is again US dollar flow, so it's kind of like the T bill flow because people are hedging. Big countries are trying to bypass the SWIFT system to do those trades. So, just to wrap up what all I said, is short-term stocks and blue chip crypto assets will be booming, irrespective of where the war is going on. I don't see gold or land or any of the other assets going through like that. People will trade, of course, hedge on oil and all of that, but that's very short-term trades. A lot of people don't use commodity right now, so that has to be outlet. Like we cannot take it as a full-fledged thing for everybody. And then cash, I don't see people putting in because major devaluations in currencies are happening right now as we speak. Major economies worldwide, so I don't see people putting cash. Cash right now is not giving the yield that people are looking for. Uh, so then the last thing, because when the uncertainty is there, everybody wants to have cash in hand. So they won't buy illiquid assets like land and all. And in long term, I definitely see normally when the major liquidity shifts happen, the money is recycles from bonds to stocks to crypto. It normally takes 45 days. So even if we see like rate cuts happening in July, we will see starting August huge spikes in Bitcoin, Ethereum, and then it trickles down to the crypto assets. Uh, and of course, the stocks this year is going to be big. Next year, it is going to be bearish, but this year, so stocks, bonds, and cryptos.
Thank you, Shashi. It's very solid. You got a very solid points, and you divide into like long term and short term, and also you just told us a lot of assets and how the capital will flows. I found Alexander is showing his hands. Hi, Alexander. Do you want to talk something?
Yes, I want to say something. What question is he answering then? What question is that?
I'm asking like which asset do you think will attract the most capital moving forward?
I'm so sorry to ask. Which question? Which number? What is that?
It's question three. We're talking about question three now. It's like the gold, Bitcoin, short term bonds, or playing cash or something. Which one do you think the asset will attract the most capital moving forward?
Yeah. Okay. So right now, the global capital is moving towards safe liquidity and stability. So gold continue attracting defense investors through geopolitical uncertainty. So why short-term treasury bonds are appealing because they offer strong yield with low. So on this issue, Bitcoin is also becoming part of the micro conversation, especially with growing institution adoption. So some investors now see it as a hedge against long-term time. Fair money move into gold and bonds. Opportunity seeking capital move into Bitcoin. And defense investor prefer cash and short duration assets. So this is the little suggestion I have on this. Yeah. Thank you so much.
Thank you, Alexander. I love these insights. Thanks for your solid points. This leads me to a point that I really want to discuss today. When black swan events happen, market availability makes all the difference. Think about it. Inflation pre-market, unexpected crisis pump up during Asian sessions. Almost every black swan event happens when traditional markets are closed for maintenance. So for macro traders, what is the real advantage of a 24/7 non-stop market with zero downtime? Ben, do you want to answer this question?
GM everyone.
Hi, Ben.
Okay, what is the question again, please?
The question is, what is the real advantage of a 24/7 non-stop market with zero downtime?
Okay, from my opinion, honestly, I think 247 markets are becoming a huge advantage in today's micro environment. News and volatile don't wait for traditional markets to open anymore. CPI data can come out before the US market opens. Geographically, geopolitically, tensions can happen overnight, and global events can move sentiment instantly. But traditional markets still close on weekends, holidays, or after trading hours, and that creates delays. Traders can get stuck watching markets move without being able to react immediately. With almost with always on perpetual market, traders can adjust positions, hedge risk, or react to news in real time from anywhere in the world. And I think that changes micro trading completely because price discovery becomes continuous instead of delayed. It also reduces the gap risk you normally see when traditional action moves today. The global economy never really sleeps anymore, and markets are slowly evolving in the same direction. I think that is all I have to say about that.
Thank you, Ben. I like your thoughts. I really think the 24/7 non-stop market gives us a lot of advantages and provide us more opportunities. And I want to ask Alexander. Hello, Alexander. For this question, can we hear your thoughts? Do you want to share your thoughts on this question, Alexander? Maybe we move to Shashi. Hello, Shashi. Do you want to share your thoughts on question 4?
Yeah, see, perps dexes have been really good thing. We are seeing the rise, the data shows right now the rise of retail back in the perp spaces because overall what is happening is people can trade across borders. There are asset classes that are not available in different geographies, and that really matters. But the biggest thing is uh, it never closes. So, as you rightly said, any geopolitical event, and this is the reason why you see there is a pattern that the US government specifically announced something on Friday evening, and they will revert it back on Monday morning. and the people are trading based on that. And we saw a lot of Brent trade happen on Hyperliquid. Um, Other assets related to the war were traded very well there. So actually, this is the future. We'll see a lot of markets eventually becoming 24/7, because you don't need. And this is the thing between people think it's a tech issue. No, it's not a tech issue. It's basically how these markets function differently. So most of these pop dexes are club. So club, you make the market. There's a maker and taker and all of that. The other markets are mostly RFQs. Of course, club has its own challenges because you have to uh, bootstrap each market with liquidity and everything. RFQ don't have that. There are exchanges like GMX and all who operate on that model where you don't need a order book as such. But that's basically the difference. But it comes with its own perks, and I think overall, all the markets that we are seeing right now, and the conversations that we are having with projects are trying to, even the traditional TradeFi markets are trying to at least initially not sift the entire thing 24/7, but spin up a new market with some liquidity to trade 24/7. There are, of course, inherent challenges in that because there is a gap that happens between the traditional market and these pub dexes, depending upon that. And we call it CME gap, very famous CME gap that happens in crypto assets in general. Now we see it for happening for other assets also. So yeah, but this is a new horizon that has opened, and it is just going to change the entire trading infrastructure and the trading markets as we see globally. So yeah.
Thank you, Shashi. You're very proficient in this economy and the crypto field. You know the market. You know what the advantage real is for this 24/7 hours market. And I found Alexander is here. Hello, Alexander. Do you want to share your thoughts on this question?
Yo, I'm back. Um, on this issue, so micro events don't wait for market opening hours. So inflation data, geopolitical conflict, or central bank announcement, so can happen anytime. And traditional markets often leave traders unable to react immediately. And at this process, that is why 247 perpetual markets are becoming increasingly important. Trader can hedge risk, manage position, and respond to val- volatility in real time without waiting for markets to reopen. So, and crypto markets already proven how value continuous trading can be during major global events. So, for micro traders, always on access means faster price discovery, better risk management, and fewer delay during period of uncertainty.
Yes, I totally agree with you, Alexander. I think you have no dips in like the difference between traditional market and the DAX. And I saw Dong is here. Hello, Dong. Dong, are you able to speak to us?
Yes, my network. I think my network is good right now.
Oh my God, you got
So
an internet problem today.
I think it's getting better right now. So for me, let me talk about the question for again. So
You know which
yeah,
question
I
we're
think
talking about, right?
yes, I know the question.
Okay, okay. Willing to hear from you.
Okay, I think another important part is speed. In traditional finance, market closing trends in a much slower world where information moved gradually. But today, information spreads globally within seconds through social media, news platforms, and online trading communities. So when markets close major events, traders are basically forced into uncertainty because they can't actively manage positions. That's why you often see huge gaps when traditional markets reopen after weekends and unexpected geopolitical events. But in a 247 supermarket, I mean, in a 247 perpetual market, there is continuous price discovery happening in real time. The market doesn't wait for a bell to ring before reacting to inflation data, war headlines, or central bank comments. And for macro traders, that flexibility is extremely valuable because micro trading is really about reaching quickly to changing global conditions. Another thing is that always on markets create a more global trading environment. Someone in Asia, Europe, Africa, or the US can all participate at the same time without being restricted by regional market hours. I think that is a very powerful shift because capital markets are becoming more connected globally. And honestly, younger traders already expect this level of access naturally. They grew up in a digital world where everything is instant communication, payments, information. So naturally, they also expect financial markets to operate in the same way. So I think always on trading is not just a convenience anymore. It's becoming part of the evolution of modern finance itself. I think that is all I have to say that.
Thank you, Tom. You got a very solid point, and I really totally agree with you. I think I really appreciate the in-depth answers. Let's wrap up with one final trending topic: how regular retail traders play the macro game nowadays. Here is our last question. Macro hedging used to be exclusive to big institutions. The barriers to entry were insanely high. But things have changed. Anyone can now trade index perpetuals, forest, rate related assets anytime. No investor qualification required, no regional restrictions, no fixed trading hours. Do you think these always on tools have changed how retail players participate in macro trading? Alexander, do you want to? Oh, what is your take? Oh, Alexander is not here. Okay, never mind. Umar, I found Umar is showing her hand. Umar, do you want to share your thought?
Yes, yes, this is changing retail trading a lot. Before, only big banks and professional traders could trade things like stocks, currency, currency. Normal people had very limited access. Now, with perpetual trading platforms, anyone can react to big news like CPI data, Fed rate decision from anywhere. Because market run every time, retail traders can now participate in market trading almost. For example, a trader can short the market if they think prices will fall. Second example, they can long gold or Bitcoin when market is stable. Third example, they can hedge their portfolio instantly without waiting market to open.
Hey, Umar, did you finish? I think
Yes,
you already told us the advantage of the DEX and the advantage of our Sonics. You are the member of our community and you know it very well. Thank you so much for bringing us your thought. I found Dong. Dong is showing your hand. Dong, do you want to say anything to us about this question?
Oh, yeah. I really think this changes retail participation in a major way. I mean, I really think this changes retail participation in a major way. So for a long time, macro trading was mostly seen as an institutional game. If you wanted exposure to interest rates, currencies, indices, or sophisticated hedging strategies, you usually needed access to traditional financial infrastructure, large capital, or institutional connections. But now, with perpetual markets and 24/7 trading access, the gap is starting to close. Retail traders today can react to CPI reports, fear the decisions, geopolitical tensions, or major economic data almost instantly from anywhere in the world. And I think that's changing the mindset of retail participation completely. People are becoming much more macro aware now. They are watching inflation data, treasury yields, oil prices, dollar strength, and the central bank commentary because they understand these things directly affect market directions. So retail participation is evolving from simple speculation into something much more informed and global connected. At the same time, access alone isn't enough. The tools are becoming democratized, but education and risk management are becoming even more important because leverage and volatility can push emotional decisions very quickly. So I think the real transformation here is not just that these retail traders now have access to institutional style tools. It's that they are starting to participate in the same macro conversation that used to be dominated only by large financial firms. And honestly, I think this trend keeps growing from here because modern markets are becoming more digital, more global, and more accessible every year. The line between institution and retail participation is slowly becoming tinier, and that is a very significant shift for the future of global finance.
Thank you, Don, for sharing. I think you and other guests just brought such great depth to this conversation. I really appreciate. Um, what an what an amazing discussion today! Huge shout out to our guests coming today and for sharing such valuable insights. And thank you all to every single listener tuning in. Some of you prefer gold as you go to safe haven. Some of you believe on-chain perpetual markets are reinventing macro trading. Others are warning us about liquidity traps in the high rate environment. Every opinion matters because there's no one size fits all answer in markets. That said, clear logic, proper trading tools, and strict risk control. This will always be essential for every trader. Once again, join our Sunnex official community. We will have daily events and rewards ready for members. Make sure to follow our incredible guests today and my account and our official Soundx Twitter accounts. Trade safely, manage your position closely. Keep an eye on macro trends and stay sharp. I will see you guys next time. Thank you for joining. Bye. Bye bye. See you next time.
Sure.